Now move on to stock valuation. Now this question, guys, broken up into two parts. So you've got a business and they're giving you two different stock that the business sells, and you are asked to calculate stock valuation based on two different sets of information. So let's just make sure we remember that. Right, so the first part of the question, 2.2, let's read the intro. Pitton Sports Shop is owned by Milo. The financial year ends on the 28th of Feb 2022. The stock records of the following two products are provided. So like I said a few seconds ago, we've got two different products. So we've got mountain bikes, right, as our one product, and then we've got powered energy drinks as our second product. So let's start off with the mountain bikes. Right, mountain bikes, the stock of mountain bikes is valued using the specific identification stock valuation method, right, and we are required to do the following. So very briefly, I'm just going to go through the questions. 2.2.1, calculate the value of closing stock on the 28th of Feb using the specific identification method. Right, the next question deals with internal controls. So explain two different examples of division of duty. Right, we'll read this question in detail when we're doing the actual question in a few minutes. And then the last question on mountain bikes, provide 2 points that shows that Milo and his customers are happy with the quality of the Gamma bikes, quote figures. Right, so why am I reading through the question? Because remember what I said earlier on, there's two different products and we are dealing with the bikes first. So let's not mix the info, okay? Right, so let's go through our information, right? So if we look at our info, there we go. So as we can see, stock records of mountain bikes, there are three different bikes. So we've got King, right? That's one type. Then Palo or Palo, and then we've got Gamma. So we've got three types of bikes. So I just want to make that very clear. Right, from the info given, okay, nothing unusual. So you've got units on hand, 1st of March, so opening stock. Then I've got purchases for the year, returns for the year, units that were sold, units on hand on the 28th of Feb 2022. So this is my closing stock, cost price per unit, and then my value of closing stock. And then further down, some info regarding sales. Okay, they're even giving me markup. Right, now that I'm familiar with the info that I have, let's now look at the questions in terms of the mountain bikes. So the very first question wants us to calculate the value of closing stock on the 28th of Feb 2022 using the specific identification method for stock valuation. Right, guys, so as you can see, there's our three bikes, right? The King, the Palo, and the Gamma. As we can see, the King, the value of my closing stock given to me, so I don't have to work out anything. Right, let's now look at the next bike, right? The Palo. Let's do the stock valuation calculation there. Right, so let's go to our info. I'm just going to use a different color so it doesn't be confusing. Okay, so looking at the number of units on hand. Now, as you can see, right, units on hand at the end of the year is not given to me, right? Cost price per unit, on the other hand, is given to me. Okay, so remember, units on hand, right? Units on hand at the end of the year times my cost price will give me my stock value, right? My stock, the rand value of my stock. So let's begin by working out units on hand. So we started the year with 62 bikes on hand, right? The Palo, at the beginning of the year, we've got 62 bikes. Right, then we purchased 250 bikes during the year. So immediately I will have more stock in my shop. 250 plus I'm purchasing stock, the amount of stock that I have is going to increase. Units returned to suppliers, so we returned 2 bikes for whatever reason, but remember that's going to decrease the number of bikes I have in my shop. Right, so at this point, how many bikes were available for selling? Okay, so remember I started off with 62, then I bought 250 and I returned 2. So available to the customers, there were 310. That's how many bikes they were. Right, now let's look at how many did we end up selling. So units sold, right, we ended up selling 245. So immediately minus 245, remember I had 310 in my shop, I sold 245, so the units on hand, right, let's work that out, 310 minus 245, so on hand I have 65 units. That's how many units I have on hand. Right, so with that 65, right, 65 on hand, times it by my cost price, that's going to give me the value of my stock. So I just want to write it now in the answer booklet. So I had 65 units and the cost price of each unit was an amount of 3,000. I think it was 500, right? It was 3,000. No, let's just go back and double check. Let's not guess. Sorry, it was 5,200. Okay, so let's fix that. Right, so that amount was 5,200. Okay, and now I can work out the value of my stock. So 65 times 5,200, and that is giving me 338,000. Okay, 338,000. Okay. Right, let's move on now to the next stock that we're valuing. It's the Gamma bikes, right? So again, let's go to the information, right? And if we look at the Gamma bikes, right, again, units on hand times the cost per unit. So units on hand, in this case, it's given to me as 18, but the cost price per unit is obviously missing. So I've got 18 times, I need to work out the cost price. Now, from the info that's given further down, I've got selling price and I've got markup. So most of you are saying, this is simple, this is grade 8 stuff. Yes, guys, that's true, it's grade 8 stuff. So using the 9,600, let's work out what the cost price is. So 9,600 divided by 1,6, right, the markup, and the cost price is 6,000. So that was an easy one. Right, 18 times 6,000 is going to give me 18 times 6,000 will give me the value of my Gamma bikes. So 18 times 6,000. Okay, right, and that gives us 108,000. 108,000. Okay, the total, remember, don't forget to include the total value of your stock, 666,000 plus 338,000 plus 108,000, and the total value of stock, you guys can quickly add this up, but you should get 1,112,000. Okay, right, good, we're done with that question. Let's now move on to the next part. Okay, so here I just want to go back to the actual question. Let's just quickly, there we go. Right, so we're now looking at 2.2.2. A whistleblower who's simply an informant, someone that tells on someone else because they've seen or witnessed them doing something wrong, right, reported to Milo that he has evidence to prove that the purchasing manager is stealing mountain bikes purchased by the business. An investigation revealed that 40 units of the King model missing from the stock records was supplied to Easy Rides, a competitor. Aha. Okay, so unfortunately, we've got an unethical business or purchasing manager that's, it's reported that he's been stealing. Right, there were no other stock shortages. Explain 2 different examples of how division of duty could prevent an incident such as this from occurring again in the future. Right, guys, so remember, division of duty, not a new concept. You've been through this quite a few times. So it's basically separation of duties. So in other words, where you've got one employee who checks up on another employee, or their duties are completely different in order to prevent fraud, and in this case, theft. Okay, so what could we implement? What divisions of duties could we put in place to ensure that this type of misconduct does not happen in the future? Right, so let's look at possible division of duty. Okay, so remember, guys, we've got a whole lot that we can discuss, but you are simply looking at 2 different examples. And obviously you are explaining. Right, so the first could be where you've got a different employee, right? One orders and the other receives the stock. So remember, you've got to explain this properly. So you've got one employee that orders the bikes, and the other, when the bikes are delivered, the other employee actually receives the stock and then obviously looks at the stock, compares what you physically received against the order form against the invoice. Okay, so separation of ordering, receiving, and recording. So you could mention this. Right, then the next point, dispatching to sales and recording sales. So here again, guys, remember, dispatching to sales, you've got the bikes in a storeroom, and you will then dispatch meaning you will send off a certain number of bikes to the actual shop, to the store. So from the storeroom, there needs to be some kind of process in terms of the dispatching of these bikes to the store for sales and the recording of the number of bikes that were actually sold. Right, follow-up documentation and authorization. This is always critical and important. So remember, whenever you are ordering stock, obviously there's a purchase requisition that's got to be filled in. Stock needs to be ordered. When the stock is delivered, there's a delivery note, then there's a final invoice. So all of that documentation is imperative. It's absolutely important. And then authorization. Now remember, as a purchasing manager, I could order 100 bikes, but I need to have someone checking on that. So do we need 100 bikes if we're only selling 40, for example? Let's rather order 50 instead of ordering 100. So there needs to be authorization. Okay, right. And then the last one that I'm going to discuss, you guys can go through the rest, is the physical stock count. So remember, physical stock count is very important because you are counting the bikes and you are comparing this against your actual records that are in the books of the business. So if I have 40 bikes, but my ledger is telling me something else, or my stock sheets are telling me something else, immediately I know that there could be theft or there could be stock missing, whatever the case may be. Okay. Right, and then the next part to the question, provide 2 points. So let's go back to the actual question before we look at the answer. Right, so the next part is provide 2 points that show that Milo and his customers are happy with the quality of the Gamma bikes, quote figures. So let me go to the information sheet, right? So from the info given, the owner and the customers are happy with the Gamma bikes for some reason, right? Compared to the other two, we've got to show why this is the case, and we've got to quote figures. Okay, so the first thing that stands out when I look at the Gamma bikes is, let's look at units returned to suppliers. Now we can see the King, we returned 54 bikes. The Palo, we returned 2 bikes. But the Gamma, we returned absolutely nothing. So that shows us that the owner is obviously happy with the quality of the bikes, right? Then in terms of the selling price, so let's look at the selling price. So if we compare what the King sells for, the Palo, and then the Gamma, we can clearly see the Gamma is the most expensive bike. However, if we look at sales, right, so that's 1 million, that's 1 million, but Gamma on the other hand is sitting at 2 million. So another indication that despite the higher markup, despite the higher price that a customer has to pay, they believe in this product, it's a popular product, and obviously the sales prove it, that's the case. Okay, so going back to the memo, right, we can see the points that I've just mentioned. So there's no returns to suppliers, right, indicating good quality. Despite a higher markup, right, your customers still want to buy, they're still prepared to pay the higher price. So 2 points, you can obviously mention those 2 points. There are more points here that you can obviously look through, but those are the 2 points that I wanted to explain. Okay, right, so let's now move on to the next part of the question. So remember, Milo sells 2 types of products, the bikes as well as the energy drinks. Let's now look at the energy drinks. So the energy drinks, the periodic inventory system and the first in, first out stock valuation method is applicable. These items have a shelf life of 66 days. So I'm just going to highlight that because that is important. In other words, 66 days is the longest you can keep the product. Obviously, after that, the product expires. It's not safe to actually have the stock on your shelf. It's not safe for consumption. Okay. So from the information given, let's look at the information and then we'll go to the actual questions, right? So as you can see, you've got stock of powered drink balances, right? Number of tubes or tubs rather. So on the 1st of March, opening stock, we had 130 tubs. On the 28th of Feb, closing stock, so the tubs unsold, 235. Right, then purchases of powered drinks during the year. Okay, that looks good. Right, carriage and purchase given to us as well. Then we've got some return to suppliers. Okay, and then we've got sales and we've got the cost of sales. Right, so let's start with the first question where we've got to calculate the value of closing stock on the 28th of Feb using the first in, first out method. Okay, so remember we're going to start with units on hand. So at the end of the year, how many tubs were not sold? Right, there we go, I've circled it. So end of the year, tubs unsold 235. So 235. Right, we're now going to break this down. Okay, so we're going to now break this down into valuing the stock. Now remember guys, first in, first out. Products bought first ends up getting sold, which means closing stock values come from the latest purchase, okay, the very last purchase. So I've got to now look at my purchases and work from the last purchase. Right, so back to our information, and there's purchases. Okay, so we bought April to September, in November and Jan, And obviously January is our latest purchase. So in Jan, the number of tubs that we bought were 180, the unit price 475, carriage has been included in this, and here's the total value. Okay, right, so let's look at, were there any returns, right? So carriage and purchase, the business pays MTY transport, a fixed rate of 8 Rand per tub. So your carriage is sitting at 8 Rand. Okay, and let's see if we returned any. Okay, so we did. Returns to suppliers, 30 damaged tubes or tubs. Don't know why I'm saying tubes all the time. 30 damaged tubs from the Jan 2022 purchases were returned to the supplier. The supplier reversed the total cost price paid, excluding the carriage on purchase. Okay, so there's no refund on that. Right, so if we take the month of January, remember we returned 30, right? So in Jan, we've got to minus the 30 because obviously those were not part of our stock. Right, so if we look at January, how many units were on hand? It should be 150. So remember, we've got 235 sitting in the shop. From that 235, 150 comes from January's purchase. Right, so looking at the balance, remember I've got to make my way up. Okay, so done with January. Now let's look at the month of November. So in November, the number of units that were purchased, 330, and clearly the balance, right? So remember, 235 is what we have on hand, minus the 150, so the remaining stock of 85 comes from the month of November. Okay, you guys with me? Right, so this is November and this is Jan. So let's take that through to our answer booklet. Right, so 150 January, 85 November. Let's now add a value to this. Okay, so let's go to January. Okay. Right, and in January, my unit price, 475 in January, right, 475. And remember, I'm also paying 8 Rand per item in terms of my carriage on purchase. So that increases by 8 Rand. Okay, so let's take that through. So 475 plus an additional 8 Rand. So remember, it's the cost price plus the carriage. Okay, right, doing something similar for the previous month. Okay, so let's go back. Right, so November, the unit price is 460, but once again, we also paid carriage, and each item, they charged us 8 Rand delivery fee. So 460 plus the 80, right, let's take that through. So 460 plus 80. Okay, right, now it's quite straightforward, guys. All I'm doing now is multiplying. Okay. Right, so let's start off with the 85 units. So 85 times 468. So that gives us 39738. I think it was O. Let's quickly check. Yeah. Right, and we're doing the same thing above. Right, so 475 plus 8 times 150. Okay, so 47, just do that one more time. Okay, so 475 plus 8, 475 plus 8, okay, and then times 150, and that is giving us 72,450. So 72,450. Right, these two amounts added up is going to give us 112,230, and that is the value of our closing stock. Okay, so a bit of calculation there, guys, but remember, take your time when it comes to these calculations, because obviously these marks are important. Okay, right, let's move on now to the next question, 2.2.5. Calculate the stock holding period in days on the 28th of Feb 2022. Use the closing stock figure. Right, now remember, guys, stock holding period is obviously closing stock, right, because they want us to use the closing stock figure divided by your cost of sales, and because they want our answer in days, not in months, we've got to multiply this by 365. Right, closing stock is what we just calculated a few seconds ago. So there's my closing stock figure, 112,230. So let's take that through. So 112,230 divided by cost of sales was given to us. So let's quickly find that amount. Right, if we scroll all the way down, right, sales and cost of sales. So my cost of sales amounted to 404,140. So let's take that through. So sales, cost of sales, we go, divided by 404,140, and remember multiplying that by 365. Right, let's pull the calculator out. So 112,230 divided by 404,140, right, times 365, right, and that gives us 101, so round that off to the first decimal place, so 101,4 days. Okay, so that is how long they are holding stock. Now remember, guys, we're going to get to this in a moment, but right at the beginning, we know that the stock cannot be held for more than 2 months. I think it was 66 days, but we'll get to that. Right, let's move on to the second last question. Okay, comment on your findings above. Provide 2 points with figures. Note that the stock holding period for 2021 was 58 days. Okay, so the first point, let's compare the 101,4 days, right? Or you can just say 101 days to the 58 days. So you can clearly see that the business is keeping too much of stock, right? Or you can say that the stock is not selling, right, as quickly as the previous year. So we can see that, right? The product is not selling as quickly as it was in the previous year. Okay. Then the second point, which I probably already explained, but I just want to quickly take you back to your information. There we go. So remember, the shelf life is 66 days, okay? And we can clearly see that the stock that they're keeping, right, really not good for the business, because the shelf life is 66 days and they are keeping stock, right, for longer than 66 days. Right, they're keeping stock for 101 days. Right, remember, it is an energy drink, right? It is a health product, and immediately there should be alarm bells here. You cannot keep stock for that long, right? If you can only keep it for 66 days, the stock that remains needs to either be written off, you need to get rid of that stock, but you should not be keeping the stock. Okay, right, so those are the 2 points that you could discuss. I think we've got one last question, and then we're done with this question. Milo has noticed that some of the stock of energy drinks has exceeded the shelf life, sell-by date. Identify the value of stock that Milo is referring to. Now here, guys, we've actually done the calculation already. So if we go all the way up, remember, we're busy looking at the end of the year, which is Feb. Right, now if we look at how our stock, so this is what's on hand at the end of February. Now that stock is made up of January as well as, I think it was November. So January and November. We can just go back to our info just to double check, right? So yeah, it was Jan and it was November. Right, so the value of stock that has been, value of stock that has expired is obviously coming from November. So the 85 times 468, so this is the stock value that has expired, the 3978. Okay, right, so you don't have to show your calculation again, right? But you can obviously write down the answer here in the space. Okay, right, so now we get to the last question. Milo wants to sell the outdated stock at half the cost price. What advice would you offer him about this proposal? Provide 2 points. Okay, so the outdated stock, the stock that has expired, Milo wants to sell the stock at half the price. So immediately, guys, what would you tell him? You're going to shout and tell him, no, Milo, you can't. You cannot sell the stock, because remember, it's obviously a risk to your customers. So even if you're selling it at half the price, remember, there is a health concern. Okay? And remember, if your customers consume this and they get sick, the business could land up in further complications. What should Milo do? He should write off the stock as a loss. So those are the 2 points that I would advise him on. Okay, so if you look at the memo, guys, it goes and it gives you a few more points, but I discussed the most important. Okay, right, we're now done with this question.